The first concept is called as accounting period concept. You sold your bike but cash not yet collected. There is a major concept called as business entity concept. Liability amount, asset amount. What is the furniture value? For every transaction we go with dual aspect. Or what is the calendar year? Your debit and credit always should matches. Hello everyone, I am your ALsir, lecturing Vidhyaashram PU College, the Temple of Excellence. We are in the second session of your chapter called Theory Base of Accounting. Now, in the first session, we learned about what do you mean by accounting principle, what are the accounting concepts as well as what are the accounting conventions. Accounting concepts, how many accounting concepts are there? Yes, there are totally 10 accounting concepts are there. Today we will learn individually, one by one, we will learn the accounting concepts. These are the accounting concepts. We have total 10. In today's session, we will discuss these 5 accounting concepts. Already I told you how to remember accounting concept. For these 5, A, B, C, D. A square. A for what? Accounting period concept as well as accrual concept. B for business entity concept. C for cost concept. D for dual aspect concept. These are the 5 major accounting concepts, and also we call it as assumptions, accounting assumptions. Now, we'll discuss one by one in today's session. 1, 2, 3, 4, 5. The first concept is called as accounting period concept. What do you mean by accounting period concept? I'll give you a small example. With that, we'll go for accounting period concept. For example, in India, normally as per income tax, what is the financial year? Yes, the financial year is from 1st April. For example, we will take it as 2020 to 31st March 2021. These 365 are 366 days. We call it as financial year. Or what is the calendar year? Yes, the calendar year is 1st January 2020, 31st December 2020. Again, this is also 365 or 366 days. Now, we have financial year as well as calendar year. Both comes with 365 or 366 days. This we call it as accounting period. Complete 365 days or 366 days, we call it as one accounting period. Now, from 1st April 2020 to 31st March 2021, whatever transaction happens, that belongs to that particular year. I can go with an example. Now you are in 11th or first PUC. Whatever marks scored in first PUC, the marks will not be added to your second PUC. Again, I will repeat. Whatever you scored in first PUC, example, in accountancy you scored 98 in first PUC. When you go for second PUC, in second PUC you scored in accountancy 97. Will they add 98 plus 97 like 195? Will they add? No. They will not add your first PU marks with your second PU. Why? Because first PU is separate, your second PU is separate. First PU is one financial year or calendar year. Your second PU belongs to one financial or calendar year. So this is called as accounting period. Whatever transaction happens like purchase, sales, expenses, salary, rent, everything, whatever happened between 1st April to 31st March of next year, we call it as one accounting period. In this, whatever sales you got, whatever expenses you made, whatever the balance you will get, that is only your profit. Income minus expenditure is your profit for that particular year. If after 31st March, if it is 1st April 2021, next day of this, we call it as next financial year, next accounting period. So, in accounting period, every 365 days we classify as one complete year, one accounting period. Now, the measurement of income or loss of business entity is relatively simple on whole life basis. Now, a complete and accurate picture of the degree of success achieved by a business unit cannot be obtained until it is separated. Whole your lifetime, whatever transaction happens, everything belongs to your business only, but you will not get clarity. Why? Because the whole lifetime transaction, you cannot identify what is your profit. You cannot identify whether your business running at a profit or loss unless you divide, unless you break up like 1 year. Now, period wise, accounting period is 1st January to 31st December. What is your calendar year? 1st Jan to 31st December. Similarly, 1st April to 31st March is your financial year for the income tax purpose. Clear? Yes. Every 365 days we break up, we calculate profit or loss. Again we start from the beginning. Clear? This is called as accounting period concept. Easy. You will get only for 1 mark. You have to write what is mean by accounting period concept. Example. What is the example? You can write as 1st April to 31st March. 1st Jan to 31st December is called as one accounting period. Yeah, we'll go for the next one. The second one is accrual concept. What do you mean by accrual concept? We have two kinds of transaction. One is cash transaction. Another one is credit transaction. Cash means what? For example, I went to some showroom, the bike price is 1 lakh. I paid 1 lakh and I collected or I took delivery of that bike. That is called cash transaction. What do you mean by credit transaction? Credit means the same 1 lakh bike, I don't have enough money. I paid only 10,000, balance 90,000 I asked for loan. That 90,000 every month I pay 10,000. I applied for loan. That is called as credit transaction. You receive your vehicle but payment has not been paid completely, which are to be paid in installment basis. That is called as credit transaction. Now come back to this one, accrual concept. So what do you mean by accrual concept? How accrual concept relates to this example? I'll explain you. Now, in this accrual concept, what is when sale is complete or service are given and it is an immaterial whether cash received or not. See, you made your sales, you made your purchases, whether you paid cash or not, that is immaterial. We don't want, just we need whether sales happen or purchase happen. Whatever it may be cash, it may be credit. For example, you are running a bike showroom. So you are running what? Bike showroom. Now, in your showroom, 10 bikes are sold. 10 bikes are sold. Out of 10 bikes, 2 bikes on cash basis, 2 bikes into 1 lakh. How much you collected from customer? Yes, you collected 2 lakh. Then balance 8 bike of rupees 1 lakh you have not yet collected. These 8 bikes you sold on loan basis. Now, how much it is? 8 lakh. I come back with your example again. You are running a bike showroom. How many bikes you have in the showroom? 10 bikes. You sold 10 bikes in 1 year. Now, 2 bikes on cash basis. You know what do you mean by cash basis? Collecting cash and giving material. Now, 2 bikes on cash basis. How much you collected? You collected 2 lakh. Now, balance 8 bike you sold, but not on cash basis. As I told you, you sold on credit basis. You sold your bike, but cash not yet collected. Now, 8 into 1 lakh, how much you have to collect? 8 lakh. How much you already collected? 2 lakh. What is the total sales? 10 lakh. In accrual basis, whether you received cash or you have not received cash, you have to mention your income is 10 lakh. Clear? Yes. Whether you have received cash or not yet received cash, you have to mention that your income is 10 lakh. In this 10 lakh, 2 lakh received, 8 lakh yet to receive, not yet received. This is called accrual basis. Accrual means still has to be received, still has to be paid. That is only accrual concept. In accounting terms and in accounting reports, whether we received or we are not received, we have to show the amount. Why? Because you have sold that bike. You will collect later, but you have already sold. This is all about your accrual concept. What is the first concept? Yes, accounting period concept. Remember, 365 days. What is the second concept? Accrual concept. Remember, receivable and payable. We call it as accrual concept. There is a major concept called as business entity concept. What do you mean by entity? Entity means identity. For example, we call you in name. For example, Mr. Raju, Mr. Ravi. If I call Raju, you will come. So, identity for everything, even though it is a living or non-living thing, we must have identity. Now, what do you mean by business entity concept? Simple concept you have to remember. Under business entity, business is separate, owner is separate. Again, I'll repeat. Under business entity, business is separate, owner is separate. Whatever personal expenses done by owner will be recorded in his book, not in business book. I'll give you simple example. Now, we'll go back for the same example. You have a bike showroom. Whatever expenses made for your bike, whatever expenses made for your bike showroom is called as business expenses. Whatever expenses made for your family members, that is called owner expenses. Now, whatever expenses made for your family members cannot be clubbed, cannot be merged with business expenses. Your expenses are separate, business expenses are separate. Even though you are owner, your personal expenses cannot be added with business expenses. Then, if you add your business expenses with your personal expenses, then you will not get clear or exact profit. You will not get the exact position of your business. Why? Because your personal transactions also included. Clear? Yeah. What is the concept for business entity? Owner is separate, your business is separate. That is only business entity concept. Now, this concept implies that business unit, as I told you, business unit is separate and distinct from the person who supply capital. Capital means what? Investment. Who invest? Owner. So, we should separate owner from the business. This is called business entity concept. So, 3 concepts we done. We'll go for the 4th one. The 4th concept is called as cost concept. What do you mean by cost concept? Simple, easy to understand. What is cost concept in this? For example, you purchased a furniture. You purchased a furniture for what value? 50,000. So we have balance sheet. Later you will come to know what is balance sheet. Balance sheet means it is a statement in that whatever the net worth of your business will be recorded. How much assets you have, how much deposits you have, how much loan you have, everything we record in balance sheet. Clear? Balance sheet explanation will come later. Now, furniture you purchased worth rupees 50,000. Now, in the balance sheet will be like this. This will be liability, this will be asset. This is amount, this one is amount. This is your balance sheet. Now, liability amount, asset amount. What is the furniture value? 50,000. We'll mention that furniture is 50,000. Now, after 10 years, the furniture will be 50,000 only. We will not change amount except depreciation. What is depreciation? Every year we reduce the value of furniture. Why? Because you are using. If you are using your furniture means the same worth furniture value will reduce. Other than that, you cannot alter this value. Why? Because we are following cost concept. Clear? Again, one more example I'll give you for better understanding. You purchased a property for your business. Example, a land you purchased. The value of land is 50 lakhs. What is the value of the land? 50 lakh. Now, you purchased on 2020. So, again same procedure. It is your balance sheet. Land value is 50 lakh you mentioned. Now, in 2021, the value of the land now, after 1 year, the value of the land is not 50 lakh, it is 65 lakh. At the time of purchase, what was the cost or price? Yes, at the time of purchase, the value was 50 lakh. After 1 year, what is the value now? 65 lakh. So that you cannot change this as 65. Why? Because we are following cost concept. At what price you purchased, that price only you should mention. Because of market value changes, you cannot change your balance sheet as 65. Always, even though it is after 10 years also, you should mention your land value is 50 lakhs only. You can sell it for 1 crore, but in balance sheet you have to show it as 50 lakh. Why? Because you purchased that land for 50 lakh. Clear? Yes. This is called cost concept. Irrespective of market value changes, we should mention only cost value. Means the purchase value only we should mention. This is called as cost concept. So the fourth concept is done. Remember, what is the cost concept? Irrespective of market value changes, we should mention the actual purchase cost in your balance sheet. The last concept for the day. So the concept is called as real aspect concept. What do you mean by real? Real means two. For every transaction, we go with dual aspect. So this concept we call it as double entry system of accounting. Double entry means there must be two persons for every transaction. One must be the receiver, one must be the giver. Simple. Any transaction you do, there must be two persons. For example, I have 2000 rupees note. From this pocket I will take out and I'll keep it in this pocket. Is that dual aspect? Or else I have 2000 rupees. From this pocket I'll keep it in this pocket. Is there any changes? No. Why? Because earlier also I had 2000. Now also I have how much? 2000. This is not dual aspect. Dual aspect means Mr. X and Mr. Y. Mr. X and Mr. Y. Now, he is a bike seller. So, who is he? He is a bike seller. Now, he is a customer. Y is the customer. Now, X sold his bike. So, Y what he did? He paid rupees 1 lakh. Again, I'll repeat. X is the seller. He is a manufacturer of bikes. Y is the customer. Y paid 1 lakh and he has given bike. X has given bike and Y has given 1 lakh. So, in this transaction, Y received bike, X received rupees 1 lakh. This we call it as dual aspect. Y is the receiver of bike, X is the receiver of what? Cash. So, this we call it as dual aspect. There are two persons for the same benefit. He got 1 lakh worth bike, he got 1 lakh net cash. This is called dual aspect concept. There is a basic concept of accounting. According to this concept, every financial transaction involves a two-fold aspects. For everything, two aspects. Why? Because one must be the receiver, other must be the giver. Myself, I cannot do any transaction. So, there must be two different persons must be there. That is, yielding of benefit and giving of that benefit. Say he is giving his bike, giving of his benefit. He is giving his cash, he is also giving his benefit. In return, he is getting bike, he is getting cash. This is called dual aspect concept. The one word for dual aspect is there must be two persons for dual aspect. One must be the receiver, other must be the giver. As per the example, for every debit there is a credit. So, if there is a receiver means there must be one giver. So, two side effect for the same amount. He is receiving 1 lakh worth bike, he is receiving 1 lakh cash, same value. Debit and this is also 500, this is also 500. Always remember your debit and credit always should matches. If it doesn't match means your problem is wrong. Clear? Yes, this is all about dual aspect concept. This is all about your today's session. In today's session, we discussed 5 concepts. Which are those? What is the first concept? The first concept is accounting period concept. What is the accounting period concept? For every 365 days, we call it as one accounting period. Second one. What is the second one? Accrual concept. Anything which is receivable and payable, we call it as accrual concept. Business entity concept. What do you mean by business entity concept? Owner is separate, business is separate. That is called business entity concept. Cost concept. Cost means what? Whatever may be the market value, we should consider only the purchase cost in your balance sheet. And the last one for today's session is called dual aspect concept. Dual aspect means for every transaction there must be two persons. One must be the receiver, other must be the giver. These are the concepts we discussed in today's session. Remember, these are only 1 or 2 marks question. Just heading, one line explanation with one example more than sufficient to score 2 marks. We end this session with the saying that learn concept and earn marks.